everybody. Happy Wednesday. Happy Wednesday. It's just after 10 o'clock on September 4th. Just wanted to run a live session, see how everybody's doing today. Markets were a little nuts yesterday, directionally really bearish to kick things off in September. What a difference a day makes as we, got to those highs August 30th, just, inched our way up as high as possible and just dumped hardcore yesterday to kick things off. Which puts the market on its heels, and we will go ahead and assess everything today. So the charts you see here, this is my futures feed. I'm looking to trade some MNQ perhaps, or some MES. Watching these price levels carefully. Let me bring up a couple of charts. Price is really floppy today. I actually just took a little strangle trade and grabbed some profit this morning. That was right here. So jumped in for 435, closed out for 370. Nice little 65 winner there. Futures wise, we just had some noise this morning. We should be heading up towards. I'm looking at a run over here. Let me drag my chart up here. See if that helps. Chat. All right. Page isn't responding. Sweet. All right. Trying to bring the chat up here. If we have technical difficulties, let's see what happens. All right. Trying to bring up the chat. There we go. All right. Chat's up. Still trying to turn my computer off. Not the computer, the camera. Let's go to this screen here. There we go. All right. So here's NQ on the left. Big sell-off yesterday, possibly pulling back. My weekly VWAP up here at 19,194 on the NQ, and the weekly VWAP on the S&P. This is ES feed right around 5571. Now, again, this could be a spike to the downside that I saw earlier. Feed, I saw this on form. This is a live feed right now. So that feed you just saw, that was delayed. I just upped my trading view to get live futures. And so what I'm looking for this morning is this is going to settle back in. Once I get a live futures feed, I'm looking for price to head back up into this weekly VWAP for the day. So again, this is going to spike all the way back up. It's kind of funny, like having the real feed on my broker platform versus this trading view feed. You're going to see, I can tell the future. We're coming down to these same lows. And we're going to have this big, long wick to the south. It's going to look something like this. So long wick to the south. It's going to push up a little bit. That VWAP, like I said, around 19,194. That's really where I'm looking to see price go today. See if we can get there. And let's go into this other chart. So this will be a little bit easier to kind of get a sense for everything else at. There we go. All right. So daily spike on volatility yesterday was up into the 20s. Currently at 20.81. Overall markets break out to the downside with a daily close. Chip makers under pressure. I saw there was some type of probe against NVIDIA, some antitrust probe at NVIDIA. There's obviously some, I think it was Heisenberg that was submitting something on SMCI. So putting some pressure on the semiconductor area. Breakout on the daily candle. I'm still looking for price to break. If we retest and fail, looking for some gap fills on the S&P. I noticed some levels, 550, which we ended up testing yesterday at the wick lows. The fill the gap, there were 45 gap fill, testing previous levels, 540. So 545, 540, the levels I'm watching for the rest of this week. And I mean, it could take longer. Obviously, we could see, big breakout on Tuesday, indecision days today, tomorrow. We have non-farm on Friday. So we'll see how that all plays out. But pressure certainly on to the downside for at least the typical seasonality to affect, job numbers and everything coming out. I think we had some data this morning. I don't know if it was JOLTS this morning. Let's go to forexfactory.com. See what we have. So we had a lower than expected JOLTS job openings. 8.09 forecast came in 7.67. Also a downward revision from 8.18 to 7.91. Any softening in the employment numbers are going to continue to put pressure on the stock market at these highs. I mean, really at the all-time highs. Obviously, with crazy amounts of volatility for the last 3 weeks, and I'd say this pressure continues to. Are we going to see something to the effect I've mentioned this before? Will we see a high to low? Will we see kind of an equal high to equal low, or maybe even a slightly higher low, and maybe some type of giant, massive volatile wedges forming here? As far as if the bulls are going to pick themselves up, I would like to see some pretty heavy support on the SPY around 540. If that level breaks to the downside back into 515, 510 levels, we're going to try to make an attempt to test these lows. But that's my defensive line right there around 540. If we go into the Qs, pressure to the downside, way off the highs compared to the S&P. We could be building some intermediate support around 450 on the Qs. If 450 is broken to the downside, then I'm expecting the Qs to head back down towards 425, lows at 424. So a couple of key levels there on the major indexes. The Dow just off the highs, a little bit of indecision. The Russell, same thing. So just kind of marking a bit of a broadening pattern. We have some higher lows, we have some higher highs. Kind of playing in the chop right now between the DIA, the IWM, the VIX elevated, which isn't a huge surprise. It does tend to immediately revert, so also not a surprise. But we're going to see here if we stay somewhat elevated. If it obviously gets higher, we start trickling up into the high 20s, 30s, then expect more downside pressure in the market. So let's take a look at the dollar index. Had a couple trades close for profit yesterday on the dollar index. With dollar index strength, that was dollar CAD. If you were with me last week for any of my live sessions, one of my favorite trades was scaling into the dollar CAD. Grabbed a couple of orders around that 34.75 to 3500 zone, stacked up some orders and came just into that pocket around 35.70. I think it would take profit around 35.50, and that was hit, which was awesome. And let's take a look at oil. Big drop yesterday in oil. And now we're looking at some major support structure. If we have it, if we hold it, then there really shouldn't be too much more downside to oil. That does not mean that I want to get long outside of what I already have exposed on it. I do have some CL trades running. I don't have anything with NG, that's natural gas, but CL, I have some $65 puts with some hedges, I think in the 50s. It's like $52 or $55. Check that right here. Let's go into position CL. So a 65 by 64 bear put spread and a 51 naked put. Yep. So okay, here's the it's a little complex, but a 65 by 64 is a bear call, or I'm sorry, bear put spread. That dollar per contract, which should be a decent chunk of profit. So let me just evaluate this trade again. So if I go into one individual account, I'm going to put all 4 legs of these together. And let me go into see this trade here. So I put all of them together in December. If I mimic this trade, let's go similar order. Okay. So my max profit would be, as long as price stays above 51. Okay, if we're between, let's say 60, trying to think here. So I collected 24 cents credit. So right here, this is a little income play that if I just collect the income, it's 240 bucks. If I can max the profit out, that would be in between, if we're below 64, but we stay above 51, then that's going to be a combination of a profit trap in addition to my income on the bull, I guess the bull put spread. So it's either income or it's bull. It's credit either way. So it should be a high probability trade. Even right now, my delta on the $51 strike is still an 8 delta. So I'm looking at about a 90 to 92% chance of profit in that one by the end of the year. I went out to December on this one. So unless we're about to have some full on oil crisis, and to that degree, I still have a hedge at 31. So if we have like a big vol event on oil, I do have 3 contracts long where this starts to head higher. On that note, I do want to take a quick peek at MES just to see. So MES for today is turned up a little bit. I did take some profit yesterday, partial profit. So I have a stacked long put between this 55.50 and 5500 and 54.50. I'm looking to see if there's more downside pressure. I did not do anything short term here. These expirations for MES are out to November. So I'm looking to see if we are about to embark on a correction that either pulls back to this 5400 zone or comes back to even try to retest these lows at 5200. Those are just long puts. They didn't cost that much. It's like $1,000 of buying power for upwards of $3,000, $4,000, $5,000 of profit. I may end up taking profit here around this 5450 zone, 5400 zone. If we have a break, retest, and go to the downside, that's really what I'm going to be watching here. If we end up finishing this week, and this is what's going to be interesting to see, price action closes for the week. We start off with a aggressive Tuesday candle, and if Wednesday we just stall and fight back a little bit, maybe Thursday same thing. Wednesday, Thursday, maybe some indecision catching the market on its heels, and then Friday a little bit more decision with non-farm payroll. Does non-farm deliver in a good way or bad way? Jolt's job today disappointing, I would say. Going into tomorrow's trading day, we have the book at 2 p.m. That's low impact, but you never know what the market's going to. Then we have ADP non-farm tomorrow. If that's another miss, we have unemployment claims. So again, we've noticed this the last few weeks. The market's highly sensitive to employment numbers. So Jolt's a miss. ADP and unemployment claims tomorrow. Of course, non-farm on Friday. So we'll see oil inventories out tomorrow as well to see if oil is going to kind of stabilize in the. At this point, high 60s. I thought $67.50 to $70 is pretty strong support. We'll see if that can hold. All right, so we've got some plays there. Dollar index is where I was leaving off. Let's go dollar index, oil, gold, silver. So dollar index trading at 101.38. Watch this 101 handle closely. I could see support being built here. We have a multi-year range lows. This goes back to early 2023, early 2023. This was a summer 2023 pivot. We had our holiday pivot in December, and then we obviously had a 2 to 3 month route on the dollar. It looks super clean, but the only good trade that was dollar weakness would have been euro dollar long. The other pairs had a lot of volatility over that same period. Like Aussie dollar, New Zealand dollar, pound dollar, dollar yen obviously is on its own island. So we'll see if this 101 handle holds. I am still slightly bearish on the dollar overall as long as we stay below 103. I was looking at this 102 to 102.50 zone. I'm willing to say that stops on the dollar probably need to stay below 103. If that's the case, I'll continue to look fade dollar. Any type of dollar rally, I'm looking to fade that. And of course, try to get a pulse on the risk on, risk off in the market. If we have risk off trading, Dollar's probably going to gain, come back in the middle of this range, have more indecision. We might be talking about this dollar back to 104, 105. But if we have a risk on trade, then the dollar likely fades to this, maybe 102 to 103 zone, start to look for lower lows. If we can breach this 101 all over again, hit 100 and lower, there's a lot of room to the downside with a weaker dollar. If that is the case, I think trading, if we see dollar weakness, looking for, gold strength, silver strength, hopefully some resiliency there. Bitcoin has been sliding off the 60 plus $1,000 high, those levels. So oil, as we said, looking for some support. I've got some traps on oil. CL, just crude light futures, 69.50. Watching these levels here, we have multi-year support. We come back into these lows here in 2021. And, the slowdown, global demand. Also, it looks like Libya might be coming back online with a resupply. And so combination of global slowdown and, excess supply in the market is driving oil lower. But 67.50 support down to $65 support. If those levels are breached, we got to watch out. But I think support will hold and probably create some decent floors on oil. If we go to gold, gold trading at 29.42. Really, gold's not doing a whole lot. Pretty indecisive. I would like to see a pullback in gold if we get one, but this to be quite stable. And so far, so good. So I'm just holding steady on gold. I'm trading a lot of GC, which is gold futures. I have some credit spreads. Let me check those positions here. They should be in some pretty decent profit. I've got them staggered out for a handful of expirations. Let's go to positions here. So anything with GC. So I've got about 50, another $870 in gold, adding up nicely. I've got some open positions here. Let me see how these are looking. So my September 25th expirations, 2,300 by 22.95. That's just a simple bull put spread on GC. So it's a futures contract with a credit spread. And then I'm going out a little bit further and trading, 2,300 by 22.80. And then I have some hedges on there as well. So let me take one look at that one. That is the GCG5. All right. So I have a bear put spread right there, a naked put, and a hedge. And overall, that trade grabbed me $1.30. Let me mimic that trade again. So if I just let me get rid of the hedge for a second. So I go way down here with that long, let me get rid of this long put. So if I delete this leg, all right. So if I get the potential profit trap where we're getting a bear put spread in profit plus my naked put offering that decay and that credit, I'll get about $2,100 on gold. The hedge is allowing me to offset any type of max loss. So either way, income wise, I mean $1.90. Or I guess I got $1.30 on the trade. So just gonna let it do its thing. I think in that sense, I like where gold is at. So all the way down here towards, let me see what that level was. When we started this, indecision is where I started to place that trade. So I went out a decent amount in time, allowing me to position for that trade. So 2,300 to 22.80, 21.10. Let me check where 21.10 is. 21.10 is way the heck down here. I mean, we'd have to have a pretty big slide in gold. 21.10. We would be looking at about a 16% drop and 16.5% drop in gold. Not saying that can't happen, but pretty unlikely. Silver behaving a little bit different than gold. I still like to see $26 support hold and hang in there as a decent floor. The next level to get me more excited about silver and probably add to my positions would be a break above 31. So my SI futures trade, my SLV, I'm just sitting and holding and waiting. My measured moves on SI, measured move on XAG up to $35. Let's go to Bitcoin. Still making lower highs, lower lows. Reached this 49.5 level yet, but watching closely. Okay, my ETFs just watching to keep an eye on those. The mining cost on Bitcoin is above 70K. So I'm looking to see if we just can get some levels of accumulation in the low 50s. If it pulls back, further, I suppose from this point, 50K was not a bad starting point. I would say 45 isn't bad. And from there, I mean, here's what I'm willing to do. Dollar cost average, 50K if revisited, okay, 50K, 40K, and just above 30K. Because the last time we had this big breakout, that was right around this 31,000 handle. And there's a nice inefficiency right around that 30,600 level. So that'd be 3 more entries that, I mean, look, it's going to scare a lot of, I don't know, I guess bull market geniuses if we pull back to 30K on Bitcoin. I realize that I can still be taking a loss on Bitcoin, but probably not. So I don't know. I mean, right now with our recent swing, we pulled back to around this 30% fib. That was that spike we had back in August 5th. That was the bottom. So I can see us just chopping around here more. I do think that in order for Bitcoin to rally and go to all-time highs, we're going to have to see something against the dollar, something with the stock market rallying higher. So once we get out of this, September effect, or however severe the correction gets, we're going to look to see if the overall markets will to the upside, and if so, Bitcoin might join forces and have a little bit more of a boost behind it. Let's take a look at Japanese yen futures. So I'm still long in the FXI, or FXY rather. That is that's an ETF trade in the Japanese yen. So Japanese yen futures up. My FXY trade is hanging in there. I think timing wise in this one, I'm out into the middle of 2025, and then my Nikkei has turned, wildly down again. And this is possibly pushing into the thoughts of, are we getting another round of deleveraging? Are we getting another kind of look at the Japanese yen unwinding? And if so, how bad does this get? We know that 27% was the high to low. We know that 17.5% was the 2-day drop. That was a record. We know that also lingered into the U.S. markets in a very short amount of time. So again, I mean, we want to see the Nikkei make a higher low if this is the case, in order to keep this thing afloat and keep the yen and all the leverage out there in the global financial markets, keep them from kind of imploding on itself. So when there is everyone running to the exit, there's only one exit door, and this was where we got a taste of that, August 1st, 2nd, and 5th. But yeah, I think we need to continue to watch this Nikkei to make sure that we're not dumping to the downside, and see if that's going to trickle into U.S. markets. Okay, Mag 7 hanging in there. Just want to take a look. So our 30-year mortgage is 6.35. Year 2-year is now sitting here equal. So again, we've talked about the inverted yield curve, the 10 and the 2. Right now we're equal. So we are sitting at that threshold of, we're no longer with an inverted yield curve. What does that mean? Well, historically, it's not gone well as far as coming out of the inverted yield curve. But to the time of that and how bad things get, we don't know. And I keep going back to a couple of things. If everyone's talking about a recession, it may not happen, at least not when everyone thinks it's going to happen. On top of that, there's never a perfect time of a 10 and a 2-year, coming out of the inverted yield curve. It might take another 3 months, 6 months. It might take another 12 months. It's hard to time that. Lead the way. And so price action wise, what I'm watching here is we have a break from yesterday's candle. A pullback makes some sense today. I'll look to see if for the remainder of September there's more pressure to the downside. If this is it, I mean, we've had, I suppose we could put a percentage to this, even though it's tiny. If we have the August 30th highs to that pullback from yesterday, I mean, we had a 2.5% correction. How bullish is this market? Well, if we're crazy bullish still, and yesterday was just a one-off move, then a 2.5% pullback, and we somehow justify new highs, maybe that's what the market is. But I don't think that's the case. I think there's more pressure on it right now. I think the market's highly sensitive to some employment data, and we have a lot of that this week. So this week is employment. Okay, we had JOLTS job openings today for the U.S. disappoint. Tomorrow we have ADP, which is a precursor to non-farm. We have the unemployment claims as well, and then we have non-farm payroll on Friday, along with CAD employment. So market sensitivity to employment is this week. Market sensitivity to inflation is next week. The Fed the week after. sprinkle in, 5 other central bank rates along with the Feds, you get a total of 6 for the month of September. Those statements, that forward guidance for those central banks will be really important to keep an eye on. All right. This is not my usual time to go live, but thanks for popping in here with me. And I think I'll kind of wrap it up there. So would have been, let me check time wise here. I think we jump in. We've been going for maybe 30 minutes or so. I'm just checking my time. If not, no big deal. So I'm going to drop a few messages in the Discord channel. We will pop in live a couple more times this week. I'm traveling, so between now and Friday, like I might not be every single day, but just stay tuned. Keep some eyes out on the Discord channel for some more messages and updates, and we'll be in touch very soon. So have a good rest of the trading day. Just going to do some maintenance on my end, taking a look at the portfolio. I'm trying to get out, actually, one more thing before we go. I'm trying to get out. I was assigned on some earnings. I got assigned on Lululemon, and I'm waiting for my broker to get me filled here. So right now, if I go to everyone's accounts, I did get assigned. It's taking up some buying power, which I'm trying to get back. Last week, I was around 650K of buying power. Right now, 487. All that is tied up in Lululemon. So I'm trying to get these closed out at the proper strike. So I basically have a 290 long put, plus I have the shares. So I'm trying to close out equal at 290 because I was assigned at 290, 250 or 295. Yeah, I was assigned at 295, collected $3.50 on that credit spread, trying to close out the 290 long put along with the shares to equal right around 290. I don't want to go into an unfavorable price. I'm just going to let this marinate at 289.99. That would take a loss of around $1.50 or so. And I'm just hoping that would happen today. It should be happening today. This expiration is Friday, so I definitely need to monitor this one. These are good till canceled. So hopefully I can get this filled by the end of the day. So I'll leave my computer on to do that. Overall, as today, took a stab on the futures market with MNQ, which has proven to be really choppy. So I'll go to the feed here. Here's the chart on MNQ. And you can see that, indecision and noise. So choppy, but working out to go back up. And that was what I pointed out earlier this morning, was looking to see if we were going to head back up into this weekly VWAP. So a lot of noise this morning, but heading up into maybe 19.1 before that gets faded back down. So same thing over here. If you look at this on the 4-hour time frame, just a little bit of a pullback to test some of these levels. This is let me go NQ here. There we go. So NQ, if we pull back towards 19.1 or pull back towards 19.3, 2 of those levels, I'd be looking to kind of fade and continue to see some downside pressure on futures and in general. So we could just have a pause day. It's kind of got caught on its heels yesterday, right out of Labor Day, coming out swinging with a big 2+% drop. I think it was 2+% in the S&P and 3% or more in the Nasdaq. So it was certainly a daily route. And then today the market just kind of collecting itself and maybe putting on some, rubbing alcohol on some of the cuts and bruises that it took from yesterday. But we'll see if it just kind of chops around and then more pressure remains to the downside as employment news comes out. So, all right, I'll let you go for today. Thanks for being with me. Look for more messages in the Discord channel, and we'll talk to you all soon. Thanks. Bye.